Welcome back to The Explainer. If you've been watching the charts lately, you already know that August 2026 is shaping up to be an absolute gauntlet for the crypto market. Today, we're breaking down a massive convergence of events, from technical hacks and institutional shifts to a major political showdown in DC that's basically keeping everyone on the edge of their seats right now. Right off the bat, let's take a look at the current vibe. The Crypto Fear and Greed Index is sitting at a very chilly 27. What that tells us is the market is trapped in the solid state of fear. Investors are highly defensive right now, essentially taking a risk-off posture as they stare down a pretty heavy combination of headwinds. And honestly, history really isn't helping ease that anxiety. Welcome to the so-called August curse. Historically speaking, late summer is a brutal battleground for crypto assets. Since 2013, August has dragged Bitcoin down with a median return of negative 6.99%. So even though July ended with a tiny bit of positive momentum, everyone in the market is acutely aware that we've just entered a really tough seasonal stretch. So let's break down threat number one, the Coldcard heist. This first major threat is a massive security breach that has completely shocked the self-custody community. Here is exactly how it went down. First, there was a firmware bug in the Coldcard MK3, specifically versions 4.01 through 5.03. This bug caused the wallets to bypass their secure hardware and fall back to a weak, predictable software random number generator. Because that entropy was so weak, hackers were actually able to mathematically reproduce wallet seeds entirely offline. From there, they just use an automated tool to sweep nearly 1,200 wallets in a matter of minutes. The sheer scale of the damage here is just staggering. We're talking $70.2 million. That's roughly 1,082 Bitcoin completely drained from users who thought their assets were locked down tight offline. As you can imagine, this incident has violently reignited the whole debate over self-custody versus ETFs. It's leaving a lot of users terrified that even supposedly unhackable hardware might harbor these hidden firmware vulnerabilities. Moving right along, that brings us to threat number two, the institutional exodus. This retreat by institutional investors is our second major threat. And July 31st was absolute single-day carnage. U.S. spot Bitcoin ETFs saw a staggering $265.4 million in net redemptions in just one day. This massive exit was led heavily by iShares IBIT, which bled $122.7 million, followed closely by Fidelity and Grayscale. And when you zoom out to look at the 30-day total, it gets even colder. We're seeing a chilling $2.16 billion exiting the space. This is a rapid, undeniable cooling of institutional demand. Plus, the market is no longer getting that Fed boost we used to rely on. Even though the Federal Reserve held interest rates steady at 3.5 to 3.75% last week, liquidity just isn't flowing back into crypto equities right now. Okay, let's pivot to DC for threat number three, the Clarity Act showdown. As if technical exploits and institutional dumping weren't enough, we've got a massive political battle unfolding right before the Senate recess. Just looking at the facts on the ground, on one side you have the push for regulatory certainty. This is the industry's top legislative priority, backed by over 100 Democratic-approved edits and endorsements from groups like the Fraternal Order of Police. But the hurdles on the other side, they are massive. The bill faces a steep 60-vote threshold to clear a filibuster, and with internal Democratic polling reportedly showing that 84% of their voters view crypto-backed candidates unfavorably, putting together bipartisan support is incredibly complicated. Right now, the bill is sitting at a record-low 27% chance of actually passing. All right, so what does all this mean for the rest of the month? Let's check out the August timeline. With all these threats hanging over the market, the timeline is incredibly dense. Definitely brace yourselves for August 4th. The market is anxiously awaiting Q2 earnings reports from heavyweights like Circle and Mara Holdings. And for Circle in particular, expectations are pretty grim. They're projected to show a massive 82% drop in earnings per share compared to last year. So yeah, it is a very high-risk week. So, where does all this pressure leave our current market pulse? Well, Bitcoin is currently hovering right around $63,460, basically desperately defending that critical 62,500 support level. Ethereum is struggling to break past the 1,900 resistance line because of some pretty weak buying pressure. Meanwhile, XRP is actually bucking the trend entirely, uniquely outperforming the rest of the top 10 and ups nearly 1.5% to $1.08. But let's take a breath and zoom out for a second. When we look at the macro perspective, things shift slightly.
Despite all the day-to-day volatility and fear we just talked about, long-term on-chain data and cycle analysis suggest that Bitcoin is actually just in a mid-bear phase of its 4-year halving cycle. If that data holds up, the true projected cycle bottom isn't actually expected until the October to November 2026 window.
Which brings us to the crucial point I want to leave you with today. As we navigate this incredibly dense month full of brutal earnings reports and DC gridlock, can the crypto market actually survive this gauntlet and hold its critical $63,000 support? Or are we about to witness the August curse trigger a massive liquidation cascade? Keep a close eye on the charts, and we'll see exactly how this plays out.